welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services. And as India, as Bharat, as Hindustan, and all of us celebrate 77 years of independence, let me first of all take this opportunity to wish all of you all on behalf of our company, Geojit Financial Services, and myself, a very happy 77th Independence Day. And let's hope that all of us work towards the progress of the nation and for betterment of the nation. Coming to the market outlook, as I speak to all of you all this Monday morning at around about 11:30 a.m., markets did continue its downward move that we saw last week, this Monday morning when we got back to the trades. But however, from the initial morning lows, we have recovered to some extent. And as I speak to you, let me give you certain levels on the Sensex, Nifty, Bank Nifty, Rupee Dollar, and of course, crude oil. So Sensex is down about 206 points. The level is about 65,116. Nifty is down about 80 points. 19,350 is the level on Nifty. Bank Nifty 215 points down. 43,985 is the level on Bank Nifty or Nifty Bank. Rupee Dollar, where we are virtually at 83 rupees to a dollar on the Rupee Dollar equation. The level is 82.95 rupees to a dollar with a weakness in the rupee of 10 paise. Expect once this level of 83 is achieved, we could possibly scale backwards. Hoping that we will scale backwards. On the Brent and NYMEX, well, elevated levels, but there is a correction. 85.90 is the level, $85.90 to a barrel is the level on Brent. And NYMEX is trading at about $82.25 to a barrel. Expect some lower levels on crude oil as well, on fallback of whatever data points and news flows we've had on the global front. And of course, on the Rupee Dollar equation, post the RBI commentary and that initial knee-jerk reaction about the statement made by the Honorable Governor of taking out excess liquidity and appropriate steps to be taken by the banks, I think the markets possibly did not like it, but I think it is more appropriate and sensible to take out excess liquidity, because that creates to a little bit of uncertainty and unfortunate circumstances if it is not done. So absolutely bank in line, otherwise the credit policy that we saw last week. Coming back to the markets, well, if you recollect, last week we did mention that the volatility will be low and we could possibly see choppiness in the market, and that would also be low. Well, it was low, in fact, not like what we saw a fortnight back, but the levels that we saw a fortnight back of 19,300 or thereabouts, we have once again touched those levels this morning of 19,300 and then recovered a little bit. So let's assume for a while that this 19,300 remains to be a sacrosanct level as far as downward move is concerned, and hope that visible buying is coming at these levels. And because that's what we saw about fortnight back, that's what we saw last week and this morning also, when we went closer to that 19,300 on spot Nifty, we've seen this buying coming through. So let's hope this buying comes through and the downside is protected. But overall, there will be a further elongated period of market consolidation. I don't think that we will have a major breakdown below 19,300 or a major breakout above 19,500, 19,600. So in effect, it's going to be a 200 to 300 points range on the Nifty, where the markets would consolidate and play for a while and try to make a base. And for the Sensex, I think it would be about 700 to 1,000 points range, wherein the Sensex will possibly move along with the movement of Nifty. Bank Nifty, however, I think there will be visible buying coming in terms of sectorial indices. On the earnings front, friends, we are virtually curtains down on the first quarter of this financial year. And to sum up, there are few earnings which may come through, but to sum up the earnings season, well, no huge negative. I think that's a big positive. And no unfortunate downward cautious commentary is also something that will go down positive. Not saying that all the sectors and all the companies delivered well. There were certain dark spots, but even over there, the management commentary was that they would possibly roll out business strategies and try to make up for the lost ground. So expecting the second and third and the fourth quarter to be a little bit better on fallback of course, how the opportunities unfold. Having said that, I think whatever remains now is, of course, in terms of global news flow and, of course, policy decision and the policy changes from the government side. Unfortunately, the session in the parliament was a washout. Let's hope that whatever remains, there is a little bit of positivity in terms of policy changes and very important and crucial bills getting go ahead as far as implementation is concerned. Uh, like we mentioned earlier, these are the levels wherein you should possibly do some portfolio building exercises. And like always, we give out two investment ideas. This week also, we have two investment ideas. First one is from a private sector bank called Bandhan Bank. Now, friends, this is a bank which has gone through a little bit of choppiness and volatility in terms of earning visibility. But there has been consistency over the last couple of quarters. And the reason being that volatile earning is because of the focus and the presence where Bandhan Bank operates. There is a little bit of uncertainty, but the management is quite positive in terms of earnings improving, and of course, taking it forward from there on. So, first one is Bandhan Bank. Second is a government PSU, which we have discussed earlier, if I'm not mistaken, a company called BEL, Bharat Electronics Limited. Defense play, order book coming out consistent, earnings improving on fallback of order book execution, and likely possibility of this earnings improving on fallback of healthy growth and order book. So these are the two investment ideas. First one is Bandhan Bank from private sector bank, and the second one is Bharat Electronics Limited, BEL. Mind you, friends, these are long-term investment ideas, so you need to have longish time horizon and try to do a staggered buying. Don't try to put all your money at one time. Market is in a consolidation zone, so try to take advantage of that consolidation zone and nibble into the markets with these two investment ideas. And slowly, steadily, as you get dips, go on increasing your investment allocation towards these stocks. But please bear in mind, these are fundamental long-term ideas, so you need to have 1.5 year plus kind of time horizon. Thank you very much for your patience hearing. Wishing all of you all once again a very happy 77th Independence Day. And let's hope that our country, Bharat, India, Hindustan, grows to length and breadth and we all prosper in that stride. Thank you all very much for your patience hearing, and I'll see you again next week. Till then, please do take care of your health. Bye-bye.